Yes, guys. So welcome back to the new session. So when we are talking about Ind AS 105, that is where we left off. Let's continue from there. Now, when we were discussing about Ind AS 105, I told you that the classification of a non-current asset under Ind AS 105 is necessary, and this standard has an objective of presenting these assets under current assets, with the reason that these assets are no longer held for use in the enterprise. So the operating income that I earn or the net profit which I earn is definitely not on these assets which are now held for sale and reclassified under Ind AS 105. So this definitely requires a separate standard to be discussed, separate recognition, separate measurement, and separate presentation is required. Now, let's try to understand what are the further steps in the standard. Let's understand what the standard talks about. What are certain assets which are excluded from the ambit of Ind AS 105? Let's go on from step by step. I have my heading in place. Ind AS 105 deals with two parts. The first one, like I told you, is dealing with non-current assets held for sale. Non-current assets held for sale and discontinued operations. Now you know this. You know that basically we are dealing with non-current assets held for sale and discontinued operation. I'll break this up into parts. First, I will take up only the word non-current assets held for sale. Then later on, subsequently, I will come into discontinued operation. Yes, there is a nexus between both, some interconnection between both. But as of now, I don't think so it is necessary. It will complicate this entire concept too much. It's a very simple standard. So let's break the first part aside. Let's take up the first part, that is non-current assets held for sale aside. What do you mean by this non-current assets held for sale? For the aspect of understanding this phrase, non-current assets held for sale, let us try to break this particular word into two parts. First of all, what is a non-current asset? And second, when do you call it as held for sale? We'll classify this into clearly two aspects. First one is non-current assets. What do you mean by non-current assets? Non-current assets are defined under Ind AS 1. Presentation of financial statements defines it, says that non-current assets are other than current assets. Then question comes up, what is a current asset first of all? If you say non-current asset is other than a current asset, then my first question should be, what do you mean by a current asset? I'll go like this. Current asset can be defined particularly into three ambits. When do you call something as a current asset? Number one, broadly four, okay. First one, these assets are primarily held for the purpose of trade. You have acquired these assets with the primary purpose of trading. That means they are contained under Ind AS 2 inventory. Number two, they are expected to be realized or sold. They are expected to be realized or sold within an operating cycle. What do you mean by an operating cycle first of all? An operating cycle is nothing but Okay, guys. They are expected to be realized or sold within an operating cycle. What do you mean by an operating cycle? An operating cycle is nothing but a time period which is taken from the date you purchase the raw material, you use the raw material in the process of production, produce a finished good, sell it to the customer, and realize the money from the customer. This entire cycle is called as one operating cycle. These operating cycles can also be considered as a period of 12 months. It should be less than 12 months. Clear? Generally. Obviously, it is an assumption. You can always say that, sir, sometimes operating cycles are more than 12 months. I will completely agree with you. But in general sense, operating cycles are less than 12 months. The third asset is these assets which are realized, consumed or sold within 12 months period, within an accounting period. Number 4, cash and cash equivalents. These are the 4 parts to define what is a current asset as per Ind AS 1. So let us write down what is a current asset. I said non-current assets are any asset other than current assets. So my current assets can be broadly classified like this. First one, they are cash and cash equivalents. They are cash and cash equivalents. Cash equivalents are any investment held with a maturity date of less than 3 months. They are normally called as cash equivalents. Part B, assets which are expected to be sold, consumed or realized within an operating cycle. I'll integrate both the points, guys. We also said they are which are expected to be sold, realized or consumed within a period of 12 months. So I'm integrating both the points out here. Operating cycle or within an accounting period. Anything less than an accounting period, which is 12 months. Within an operating cycle or within an accounting period, you can always say that it is less than 12 months, not more than 12 months. This is the second part of definition under current assets as per Ind AS 1. The third definition or third part of inclusion are assets held primarily for the purpose of trade. This is the definition of current asset as per Ind AS 1. Current asset is defined under Ind AS 1. Even it is defined under Schedule 3 of Companies Act as well. So current asset includes cash and cash equivalents, assets expected to be sold, consumed or realized within an operating cycle or within an accounting period, or assets which are held primarily for the purpose of trade. Now, what is an operating cycle? We are listening to this word for the very first time. So let us try to understand what is an operating cycle. When I use the word operating cycle, remember, always there is an amount of money which is involved. Correct? The first thing, any business starts with money. Without money, you cannot start a business. Yes, idea is the primary, but money, without the money which is aiding your idea is of no use. this money is in turn used to purchase raw material. This raw material, when processed, gets converted into finished goods. These finished goods are sold to customer. These customers realize money in the form of any collections from the customer or realizations from customer. So I'm saying there is a purchase of raw material. They are processed into finished goods. They are sold to customers, and the customer realizes money in cash. This entire cycle can be considered as my operating cycle. This is called as operating cycle. Clear? So whenever I say operating cycle, I said it is generally within 12 months that you will have to realize this money. So therefore, this operating cycle is generally assumed to be less than 12 months. So what are we saying? We started with the word non-current asset, and I said a non-current asset is other than current asset. Then what is your current asset? Cash and cash equivalents. Assets expected to be realized, sold or consumed within an operating cycle or within an accounting period, which is not less than or not more than 12 months. Third one, assets held primarily for the purpose of trade. That means you directly bought goods with an intention to sell those assets at a later point of time. Now that will explain me what is a non-current asset, which is other than current asset. Then what about this part, held for sale? When do you call that an asset is held for sale? I will specify an asset as held for sale only when management intends to recover the carrying value of asset primarily from its sale. Rather than its use in operations. So I'm saying the management is intending to collect or recover the carrying value of the asset primarily from its sale of the asset rather than from its use in operations. That means I don't intend to use this asset and derive benefit. I want to derive benefit from the sale of the asset. I believe that selling the asset, I would derive a better benefit from this particular asset rather than from using it. Why do you believe so? Why do you think that an enterprise will come to such a conclusion that they would derive a better benefit or they would want to recover the carrying value of the asset primarily from its sale rather than from its use? Why do you think that people would come to that kind of conclusion? Why do you think management has decided so? Now, this generally occurs when a particular asset is no longer determined to be used by the enterprise. I have no intention to use this particular asset. For example, I am operating a particular asset and I thought the cost of operating the asset in the cost of each finished product is about 20 rupees per unit. Outside the market, I was getting the same processing as an outsource done at just 10 rupees. At just 10 rupees, I am getting the work done from outside. Why should I be spending 20 rupees? So I shut down these operations and I made sure that these assets, whatever are held by the enterprise today, I would want to sell them because I found a cheaper alternative to basically process the goods. So whenever you're intending to sell these assets, even though the useful life of the asset has not completed, you have revised the useful life of the asset. Now, in such case, the management intends to recover benefits from this asset, from the sale of the asset, and not from the use of the asset. Then you can call it as non-current asset held for sale. So what is a non-current asset? Any asset other than a current asset can be considered as a non-current asset. What is a current asset? Current asset is broadly divided into three categories: cash and cash equivalents, assets which are expected to be sold, consumed or realized within a period of 12 months or within an operating cycle. And number three, assets held primarily for the purpose of trade. That means you are purchasing only with an intention to sell the asset. These are current assets. But if I am talking about any asset other than these current assets, then they should be regrouped under non-current assets. When do you call these non-current assets as held for sale? When the management is intending to recover benefits or the carrying value of the asset from the sale of the asset and not from the use of the asset. Guys, broadly if I talk about, non-current assets can be either contained under Ind AS 16 as property, plant and equipment, or can be contained under 38 as intangible assets, or can be contained under 40 as investment property. Yes. Are there not other assets which can be called as non-current? Yes. There are certain other assets which can also be called as non-current, but they are excluded specifically from the scope of the standard. Very good. You bought out something now. You are saying other than your property, plant and equipment, investment property and intangible asset, there are other non-current assets as well, but they are not covered within the scope of the standard. That means they are particularly excluded from the scope of the standard. What are these assets which are excluded from the scope of the standard? Guys, the primary reason of excluding such assets from the scope of Ind AS 105 is because such a criteria of non-current asset held for sale does not apply to those assets. It doesn't apply to those assets. So what are these exclusions from scope? Exclusion from scope of standard. They are non-current assets, but they are not covered under this standard. They primarily cannot be classified as held for sale. What you can classify as held for sale is only property, plant and equipment, investment property and intangible assets. First one, a deferred tax asset which is recognized under Ind AS 12. Your income tax standard particularly talks about this kind of asset which can be called as deferred tax asset. I'll come back to the discussion of deferred tax asset when we discuss about Ind AS 12. Long discussion goes into it. Assets arising from employee benefits. Guys, these assets arising from employee benefits in other language are also called as plan assets. If you look at Ind AS 19, you get this word plan assets. They are discussed as a part of Ind AS 19, guys. They are excluded from the scope of this standard, Ind AS 105, even though they are non-current assets. Here, this word plan assets, remember, we will touch it as soon as we complete the asset. The first liability standard which I will take up is Ind AS 19. Part C, financial assets. Plenty of financial assets can be non-current, guys. They are not considered as a part of Ind AS 105. They are covered under Ind AS 109, 32 and 109. 32 talks about the definition. 109 talks about measurement, recognition and presentation. Next one, biological assets. This word biological assets we did come across under Ind AS 16, where we differentiated them from bearer plants. This biological assets are covered under Ind AS 41. They are primarily carried at fair value. So this concept of held for sale does not emerge because it does not meet the criteria of non-current assets. Rights under insurance contracts. Separate standard deals with it. Which is your Ind AS 104. This standard specifically deals with it, so I can exclude it from the scope of your Ind AS 105. So guys, whenever I am talking about these standards or these assets, they are essentially non-current. I am not saying that they are not non-current assets. They are non-current assets, but however, they should not be included within the scope of Ind AS 105. They fall outside the scope of Ind AS 105. Now, deferred tax assets covered under Ind AS 12, plan assets under Ind AS 19, financial assets under Ind AS 32 and 109, biological assets under Ind AS 41, and rights under insurance contracts under Ind AS 104. So these are the 5 assets which are non-current but not held under or not dealt under Ind AS 105. So that means the only other non-current assets which I am left out to be discussed as a part of the standard is only Ind AS 16 property, plant and equipment, Ind AS 38 intangible assets and Ind AS 40 which is your investment property. Only these 3 assets fall under this category of non-current assets held for sale. So what is a non-current asset? An asset which is other than a current asset for which the management intends to recover benefits or the carrying value of the asset primarily from the sale of the asset and not from its use. Then you can call any non-current asset to be classified as held for sale. Now, let's get into the recognition criteria. When do you recognize? When do you classify an asset as non-current asset held for sale? Don't recognize. Recognition of the asset is already done. It is either recognized under 16, 38 or 40 but further classified into 105. A non-current asset which is recognized under Ind AS 16, 38 or 40 shall be classified. You are not recognizing it, you are only classifying the asset. Shall be classified under Ind AS 105. So what did I mean by this sentence? I am saying it is recognized as per some other relevant standard 16, 38 or 40 but it is further reclassified into 105 if the following conditions are satisfied. What are the conditions? Only 2 conditions here. The first condition is the asset is held for sale immediately in present condition. Asset is held for sale immediately in present condition. Or another classification criteria, and second criteria for classifying it as non-current asset held for sale. Sale is highly probable. These are the two conditions. The first condition is that the asset is held for sale immediately in present condition. Second one, that the sale is highly probable. Whenever you satisfy these two criteria, an asset which was earlier recognized under 16, 38 or 40 shall be classified under Ind AS 105. Correct? So this is fundamentally what we are talking about. Whenever we come across these standards of 16, 38 and 40, then we will have to be sure that if these conditions are satisfied, then that asset which was earlier recognized under PPE or investment property or intangible asset should be reclassified as non-current asset held for sale. Now, what are these terms that you can find? You are looking at a word called as non-current asset held for sale, and you are saying the conditions necessary to be satisfied are: asset is held for sale immediately in present condition and the sale is highly probable. When do you say that the asset is held for sale immediately in present condition? For example, let's say I have a car. Okay, basic simple examples you take them to understand. Let's say, for example, I have a car, and this car I have been using it for my own purposes. Over a period of time, I started believing that I want to sell the car and purchase a new one. A fantastic idea. I have said, probably in this particular condition or in the existing condition, probably I don't find enough buyers for this car. So I said my intention to sell the car, or I may not be able to get the price which I intend to get. So I said my intention to sell the car is right now, but after I get it painted and after I get it serviced from the workshop. So therefore, your service conditions and the painting condition, if they are supposed to be satisfied and only then the asset is held for sale, then you cannot claim that the asset is held for sale immediately in present condition. I want to sell my house, okay, but unfortunately, probably the walls have been already worn out. You find that the painting is shabby. So I called a painter. I asked him to paint the entire wall so that tomorrow if the buyer is coming, he'll be impressed with the way that the house is being maintained. So in such cases, you cannot say that the asset is held for sale immediately in present condition, because before the sale happens or before the asset is held for sale, there are certain things that you expect to do on that particular asset. Correct? In such cases, you cannot claim that the asset is held for sale immediately in present condition. Then what is the condition necessary to be satisfied to call it as an asset held for sale immediately in present condition? Let's start writing it down then. What do you mean by this phrase? Held for sale immediately in present condition. When I use this phrase, what do you mean? I mean to say that, number one, If an asset is held for sale in near future, asset is held for sale in near future, I am no longer intending to use this asset. I'm expecting to replace the asset. So in near future, I would expect to basically sell this asset. Near future in accounting term means anything less than 12 months. So within this 12 months, I expect to sell this asset and I don't intend to continue to use the asset for more than one accounting period. That is near future. Now, such assets cannot be considered as held for sale immediately because the condition near future is there. It is not immediate sale. Therefore, it cannot be classified under Ind AS 105. An asset held for sale near future, an asset held for sale in near future cannot be classified as non-current asset held for sale. Because I use the word near future. Near future is not immediate sale. Since I use the word near future, it is not held for sale immediately in present condition. Therefore, you cannot classify it as non-current asset held for sale as per Ind AS 105. Number 2. Let's say there is a particular asset which is in the process of production. You are essentially using or vitally using it in an ongoing production process. Okay. Today a buyer entered your premises. You are looking at the buyer and the buyer said, and you gave an advertisement, let's say. You gave an advertisement that a particular asset is held for sale. Buyer entered the premises and he asked, where is the asset that you want to sell? I showed him an ongoing production process and I said, that particular asset in that production process is the asset which is held for sale. He said, how can you use the asset when you are actually holding it for sale? Now, if you are essentially and vitally using it in an ongoing production process, then you cannot claim that the asset is held for sale immediately in present condition. For me to satisfy this condition of held for sale immediately in present condition, the asset should be discharged from its active use and has to be distinctly identified. I have to place it separately and say that this is the asset which I am not using and which I intend to sell this asset. But however, even though an asset which is used essentially in an ongoing production process can be classified as held for sale if I intend to sell the asset along with the order which I receive. I am using this production process or I am using this machinery in the production process and I intend to sell this asset, not the asset alone, but even the ongoing order as well. Together with the ongoing order, you can take it. You are using it in the process of production, take the order as well. The order is yours, the asset is yours. Then you can definitely claim that the asset is held for sale in present condition. Otherwise, if an asset is vitally used in the production process, then you cannot claim that the asset is held for immediate sale in present condition. Let's write down. Second point. An asset vitally used in an ongoing production process cannot be classified as held for sale. If an asset is vitally used in an ongoing production process, it cannot be classified as held for sale unless the asset is intended to be disposed along with the ongoing order. You are intending to dispose the asset together with the ongoing production order, then you can classify it as asset held for sale. Otherwise, if you are only intending to sell the asset, which is already being vitally or essentially used in an ongoing production process, you cannot classify such asset as held for sale under Ind AS 105. Asset vitally used in ongoing production process. Correct? Now the last part. Guys, immediate sale in present condition. Immediate sale in present condition. That means the asset is expected to be disposed immediately or promptly without any modifications or refurbishment. No modifications to the asset, no refurbishment to the asset. Like I told you, I'll paint the building. I will service the vehicle before I sell it. These are modifications or refurbishment. Without such modifications and refurbishment, if it is expected to be sold immediately, then you can classify it as held for sale immediately in present condition. So three aspects that we have seen. First case, I'm saying an asset held for sale in near future cannot be classified as held for sale since the word immediately is not satisfied. Number two, an asset which is vitally used in the production process cannot be classified as held for sale unless you intend to dispose the asset along with the ongoing order. Clear? Third one, I said you have to sell the asset or you expect to sell the asset without any modifications or refurbishment. Then you can classify it as Ind AS 105 non-current asset held for sale. Now, if these are the three criteria which are very, very important to understand the word held for sale immediately in present condition, then what is the second word being used? The second criteria for classification of an asset into 105 is that the sale is highly probable. Now you tell me, when do you say that the sale is highly probable? You have an asset, man. You have a particular asset and you intend to sell the asset. When can you say or when can you claim that the sale is highly probable? You are expecting, yeah, definitely the asset will be sold. Tell me, how does that happen? Number one, the asset is my parents' asset. Okay, let's say the house which I intend to sell belongs to my parents. I haven't even communicated with them. I haven't even taken their consent. I put it up for sale. Okay. In such case, the sale is not highly probable because there is every chance that the actual owner of the property, which is my parents, might object to the sale of that particular asset. Correct? So therefore, for the sale to be highly probable, then the appropriate level of management should take the decision for disposal of the asset. Appropriate level of management should take should plan for the disposal of the asset. Correct? Number two. Okay. I took the consent of my parents. and we decided, yes, this asset, let us sell it off. Everyone was on the same consensus, so we intended to sell it. So again, we made sure the days were running. We are not even making an effort also to sell this. How is that possible? For you to make sure that the sale happens, I have to put some effort. What is the effort? At least I have to make sure that there are some pictures of this particular house taken. I inform the broker that my flat is available for sale, sir, and this is the value which I am expecting for the flat. Or I might have uploaded the the asset on OLX, or I have uploaded the asset for sale on Magic Bricks or No Broker or any other platform. So whenever these things happen, only in such case where you have made an attempt to identify a buyer, only then you can say that the sale is highly probable. If you kept your mouth shut after planning to sell the asset, then you are definitely not you're expecting the sale to happen very soon, because you haven't launched a campaign to identify a buyer. So that is the second one. The second one is an active program should be launched to identify the buyer for the particular asset. Number three. The asset is priced. The asset is priced reasonably with reference to the fair value. Reasonably with reference to fair value. What is this? How is it so important for you to claim that the sale is highly probable? It is important for me to claim that the sale is highly probable only if the price is appropriate. Sir, my flat right beside mine is being sold for 1 crore. It's the same size, same dimension, same facing. I am saying, sir, I stayed in the flat. If tomorrow someone will enter the flat, then they will proudly claim that my previous owners were so and so. So therefore, I expect to sell this asset not at 1 crore but at 2 crores. Then you are not pricing the asset reasonably in relation to its fair value. In such cases, you cannot claim that the sale is highly probable. You cannot claim that the sale is highly probable. Number 4. You are expecting to complete the sale within 12 months. You are expecting to complete the sale within 12 months. So within 12 months, I expect to sell the asset. Last one. Any change or withdrawal from the plan to sell the asset is highly unlikely. I am not expecting to withdraw or change my plan to sell the asset. If I don't find a buyer, it is okay, I will try to lease out the asset. No. It is highly unlikely that I will withdraw from my plan to dispose this asset or sell the asset. Only then you can say that the sale is highly probable. If you look at, in total, I have given you 5 conditions. Number 1, appropriate level of management has decided to dispose the asset. Number 2, what is the second condition which I told you? That you have launched an active campaign to identify a buyer. You posted an advertisement. You informed the broker. So that is an active program to identify a buyer. Number 3, I priced this asset very reasonably with reference to its fair value. Number 4, I am expecting to complete the sale transaction within 12 months. Number 5, it is highly unlikely that I will change my plan of disposal or withdraw from the plan of disposal. If these 5 conditions are satisfied, then you can say that the sale is highly probable. So write down. Second condition. Sale is highly probable if first condition, the appropriate level of management is committed to the plan of sale of asset or disposal group. Guys, I will talk about this word disposal group in a few minutes. So keep it aside. Only think about asset. The appropriate level of management is committed to the plan of sale of the asset or its disposal group. Number 2. An active program to identify a buyer is initiated. I have initiated an active program to identify a buyer. Number 3. Asset is marketed at a price which is reasonable with reference to fair value. The asset is marketed at a price which is reasonable with reference to its fair value. Number 4. D. The sale is expected to be completed within 12 months. Within 12 months, I am expecting that the sale will be finished. Part E, last one. Significant changes or withdrawal from plan is highly unlikely. Withdrawal from plan or any significant changes to the plan are highly unlikely. These are the 5 conditions which are expected to be satisfied when you want to claim that the sale is highly probable. Just let you see all those 5 conditions, guys. Can take down. Yeah. Sale is highly probable if these conditions are satisfied. I hope you have written down these criteria. Now, let's talk about certain situations now. You said that the sale should be completed within 12 months. What if 12 months has elapsed by and you could not finish the sale? Okay. I expected that the sale is finished within 12 months. What did he say? The sale is expected to be completed within 12 months. Only expectation, right? So I expected that the sale will be completed within 12 months, but I could not complete the sale within 12 months. Can I still classify the asset as held for sale under Ind AS 105. Today, the asset has been held for sale for more than 12 months. I've been identifying a buyer. I launched an active program. The price is very reasonable, but the market is as such today, which is not in my control, that I'm not able to sell this asset. So in such situation where I'm not in a position to sell the asset and the disposal is delayed by more than 12 months, can I still continue to classify the asset as held for sale? Yes. But however, for you to continue to classify the asset as held for sale under Ind AS 105, even if the sale was delayed by more than 12 months, two necessary conditions have to be satisfied. What are those two necessary conditions? First condition is that the delay is beyond the control of the enterprise. The delay has occurred, I agree, but the delay is not in my control. The delay is beyond the control of the enterprise. Number one. Number two, the enterprise is still committed to the plan of disposing the asset in near future. The enterprise is still committed to the plan of disposing the asset in near future. If these two conditions are satisfied, even if the delay is beyond 12 months, or so if the sale is delayed beyond 12 months, you can still continue to classify the asset under Ind AS 105. The balance sheet date which occurred, you are the auditor, you found that an asset was classified as held for sale. First question you ask is, when was this first classified as held for sale? Then he said 2019, sir. What 2019? 2019 you are carrying on the asset even till now. How can you classify? You said you have to finish the transaction within 12 months. So make sure that you reclassify it back to the other standard to which it actually belongs to. The management said, sir, wait, sir. Please don't reclassify. I am still committed to the plan of sale. But the delay which occurred in the sale is because I am not in the control of that. There was COVID in between. There was certain restrictions in between for property registration. That is the reason why I could not sell the asset. Otherwise, the sale would have been finished. In such cases, you can continue to classify the asset as held for sale under Ind AS 105. This is the first aspect which I have to discuss. Other aspects also I'll discuss. First one I'm talking about. When sale of asset is delayed beyond 12 months, when the sale is delayed beyond 12 months, then I'll put a condition like this. The asset can continue to be classified as held for sale as per Ind AS 105. If, first one, what are the two criteria? First criteria, if the delay in sale is beyond the control of enterprise, Number two, there is a sufficient evidence that the enterprise is committed to its selling plan. The enterprise is still committed to its selling plan. I have no plan to withdraw from it, and I have sufficient evidence for it. What is the evidence? I displayed an advertisement recently, sir. I've displayed the advertisement recently. 2 days back also there was an advertisement which has been again played out for selling the asset. You look at what is a fair value. I've brought down the fair value of the asset to its fair value because I expected probably the sale might occur very soon. So these were criteria based on which you can continue to classify the asset under Ind AS 105 even if the delay is beyond 12 months, if such delay is not within my control. And as an enterprise, I have no withdrawal of the plan. It is sufficient evidence is available that I am still committed to for the plan of selling the asset. Here, first one. Let's look at the second aspect. Yes, I'll have to bring up the concept of the disposal group as well, but let's talk about the second. My investment in subsidiary is 100% an asset. I don't expect to sell my investment in subsidiary. Since you are not expecting to sell the investment in subsidiary, I can always say that it is a non-current asset. It is not expected to be sold or realized within 12 months. It is not held for the purpose of trade. It does not belong to cash and cash equivalents. 100% my investment in my subsidiary is a non-current asset. Such non-current asset held in the form of investments in subsidiary can be classified as held for sale. If you intend to dispose a part of the investment, in such a way that you lose controlling interest over the subsidiary, you don't have to dispose the entire investment. Even if you dispose a part of the investment in such a way that you lose controlling interest over the subsidiary, you can classify that particular transaction as held for sale. Let's say I have a subsidiary S. My enterprise controls 65% of interest in subsidiary. 65% of equity shares I own, I hold. Let's say, for example, I intend to dispose of 20% of this investment. My intention is only to dispose 20%. From 65% where I had a controlling interest, if I intend to dispose 20%, then automatically my shareholding in the company of subsidiary will come down to 45%. I no longer have a control over the asset, over the enterprise. Therefore, in such cases, irrespective of the amount of investment held after the partial disposal, if you are losing the controlling interest due to partial disposal, you can classify the investments in subsidiary as a non-current asset held for sale. Let's bring up this concept. Investment in subsidiary intended for disposal. My intention is to dispose this investment. Intended for disposal. If you are intending to dispose it, then in such circumstances, my disposal can occur in 3 ways. Broadly 2, I'll bring back the third one. First one is called as complete disposal. You are not holding any share in the subsidiary after the disposal, or there is a partial disposal. In case of partial disposal, I get broadly two categories. Partial disposal, where controlling interest is lost. Where my controlling interest is lost. What do you mean by this? That means that is the voting power is less than 50%. Your voting power after the partial disposal is less than 50%. Therefore, you lost controlling interest over the subsidiary. Or partial disposal where controlling interest is retained. What do you mean by controlling interest is retained? That means even after the disposal, the shareholding in the subsidiary is still more than 50%. Therefore, controlling interest is still retained in that particular enterprise. Now, in these two types, complete disposal or controlling interest is being lost, in both these situations, I can say that there is a loss of control over subsidiary. When I have lost control over the subsidiary, or when you intend to lose control over the subsidiary, in such cases, I'll classify it under IND AS 105. Classified under IND AS 105. But whenever you're talking about the last situation where you are intending a partial disposal, but the disposal is in such a way that you are still holding controlling interest over the subsidiary, in this case, it is not classified under IND AS 105. These are circumstances which I am talking about. As far as interest in subsidiary is concerned, these are the situations when you can classify it under IND AS 105 and situations where you need not classify it under, or you cannot classify it under IND AS 105. Now, an asset, two things that we have discussed. One is when the disposal is expected is beyond 12 months, or it has been 12 months but you still could not dispose the asset, and investment in subsidiary held for complete disposal or partial disposal. After these discussions, I'll bring out a new way of disposal. Exchange of asset. Exchange of asset. I intend to give up this particular asset and intend to acquire another asset on exchange. Can this be still classified under IND AS 105? Because you are not intending to sell the asset, but you are intending to exchange the asset. Can it still be classified under IND AS 105? Yes. Answer is yes. Number two, you have abandoned the asset. What do you mean by abandonment? I am no longer using the asset. I'll just leave the asset there itself. I'll come back. I'm saying that this asset, I'm neither holding it for sale. I haven't lodged any active program to sell the asset. But as such, I just left it. I don't want to use the asset any longer. It is discharged from its active use, but not intended for sale as of now. Tomorrow, probably when the demand increases for that particular product, maybe I will employ this particular machine, but as of now, it is discharged from its active use. This is called as abandonment. An asset which is abandoned, can it still be classified under IND AS 105? Third one. An asset held for distribution to its owners. So that means this particular asset is not expected to be disposed, not expected to be exchanged, but I expect to basically distribute it to the owners instead of dividend, I am giving an asset. Can such assets be classified as Ind AS 105? Three aspects, three discussions. Let's start. Talking about an asset abandoned is nothing but it is discharged from active use however is not intended for disposal. I might employ this asset again in active use later on when the demand increases or whenever I want. It is not intended for disposal. Therefore, in such cases, such assets are not expected to be classified under Ind AS 105. Abandoned assets are not expected to be classified under Ind AS 105 since they are not held for disposal. They are only discharged from active use. First discussion is done. Next, assets held for exchange. I don't want to sell, but I want to exchange. Can I still classify? Or distribution to shareholders. Asset held for exchange or distribution to shareholders. In either of these situations, I can say disposal of asset shall include exchange or distribution to shareholders as well. So disposal of an asset shall include exchange or disposal of distribution to shareholders, guys, not discharge. Distribution to shareholders as well, apart from disposal or apart from sale. Apart from sale, you can either dispose the asset by exchanging the asset or by distributing it to the shareholder. Therefore, they can be classified under Ind AS 105. They can be classified under Ind AS 105 because they are held for exchange or distribution to your shareholders. That's it. These are the three things that I wanted to discuss. First one is your subsidiary, disposal of interest in subsidiary. Number 1. Number 2 is abandonment. Number 3 is asset held for exchange or distribution to shareholders. Now, Guys, I want to pick up something new. When I say something new, I'm talking about an asset which is non-current in nature, acquired only with the primary purpose of disposal subsequently. I'm acquiring a particular asset with an intention to dispose it subsequently. Okay, it is a non-current asset. Why did you do that? Business gain. Let's say I expect a particular land to appreciate. So apart from my business cycle, I had some surplus funds. So I made sure that I purchased that piece of land and I expect to sell this land in near future and make sufficient profits. Can I classify such assets as Ind AS 105 at the time of acquisition itself? You are saying you recognize an asset as per Ind AS 16 property, plant and equipment, or 40 as investment property, or 38 as intangible asset, and then reclassify it to Ind AS 105 when they are held for disposal. Correct? But now I am bringing up an asset which is acquired primarily for the purpose of disposal. A non-current asset acquired primarily for the purpose of sale. Should I classify it immediately on acquisition itself under Ind AS 105? Answer is yes. Even though it is a non-current asset acquired primarily for the purpose of sale, you can classify it or you can recognize it directly under Ind AS 105, provided, number one, you are expecting that the sale should be completed within 12 months. Okay. However, it need not satisfy the criteria of held for sale immediately in present condition. If the condition is expected to be met within a short time frame, what do you mean by near future? 12 months. Within a short time period means what? Within 3 months. The asset is not held for sale immediately in present condition, but I expect to sell the asset within 3 months after doing certain development. I purchased a building. I want to paint the building and sell the building. My primary purpose of buying the building itself is to subsequently sell it. So at the time of acquisition, I will classify it as Ind AS 105, even though the asset is not held for sale immediately in present condition. I want to paint the asset, refurbish the asset, and then sell the asset. In such cases, these conditions can be met within 3 months. You can still classify it as held for sale under Ind AS 105. Let's put up this heading. An asset acquired exclusively with a view of subsequent disposal. An asset is held exclusively with a view of subsequent disposal. Okay. When I am acquiring an asset exclusively with a view of subsequent disposal, in such cases, you can classify the asset as held for sale. Recognize or classify the asset as held for sale on acquisition or on date of acquisition under Ind AS 105. If, what is the condition? Number one, asset is expected to be disposed within 12 months, near future. Or number 2, even though the asset is not ready for sale, is not ready for disposal immediately in present condition, the condition is expected to be met in short period. Today it is not expected to be sold, today it is not ready for sale immediately in present condition, but however, that condition is expected to be met in short period. What do you mean by short period? Short period is within months. Short period is within 3 months. An asset is expected to be disposed within 12 months, and even though the asset is not ready for disposal immediately in present condition, the condition is expected to be met in a short period. Within 3 months, you are expecting to meet the condition. In such cases, the asset, even though it is not held for sale today in present condition, it can still be classified as non-current asset held for sale. Now, so much of discussion that we made, only our discussion till now was about classifying a particular non-current asset under Ind AS 105. Asset abandoned cannot be considered, asset held for exchange can be considered, investment in subsidiary can be considered if there is a complete disposal or a partial disposal where the controlling interest is lost. We have seen all this criteria put together, and our discussion has only been with respect to classifying an asset under Ind AS 105 as held for sale. When an asset is classified under Ind AS 105, then what should be the measurement of that particular asset? You cannot measure it as per Ind AS 16 or Ind AS 38 or Ind AS 40. Those cost approach and revaluation approach are only applicable if an asset was classified under 16, 38 or 40. But now you are reclassifying from these standards into Ind AS 105. So therefore you will have to bring out a complete new aspect. The measurement should be subsequently new. And what is the measurement on date of classification and what is the measurement on each balance sheet date? Now, apart from this, we use the word disposal group. We use the word disposal group. What do you mean by this term disposal group? Do you have any particular meaning for this disposal group? And how do you recognize this particular, how do you measure these disposal groups as per Ind AS 105? This will be our next discussion, which we will see in our next segment.